traders, welcome to 2018, the first week of this happy new year. Now, since my last video was about 2 to 3 weeks ago, so I hope everyone took some time off last year toward the end of the year, and hope you had a good rest. And now back in the market, expecting another great new year. Okay, so first week generally, I personally wouldn't participate in the market. A very big reason is because although the market opened January 2nd, but a lot of hedge fund traders are not back from the holiday. That means first of all, the liquidity is still thin. But second thing is that whatever you see in the price action is not that certain, right? You wanna the price action to reflect the market participants, and if the participants are not fully back in the market, then the price action itself has less meaning for the market. So personally, that was my view for this week. That's why I didn't do a video beginning of the Monday and really just do a quick wrap up. So I actually gonna start trading next week and slowly getting back to the market. So this week, obviously, nothing much had happened in terms of the catalyst, but that does not mean the market was quiet. And on the contrary, the market basically continued the strength from last year. So many of you recall last year, the biggest event toward the end of the year was the tax cut reform, right? Tax reform. And that basically had boosted not only the US stock market, but the whole global economy. It just basically reaffirmed that the economy has picked up, not only for US, but for the global. And we had a very strong risk-on sentiment. Now, in fact, I don't know if you guys remember, I had a Japanese yen trade that was looking to buy into December because I thought December we might have more risk of sentiment due to a possible terrorist attack and at the end of the year. Basically, I was quite pessimistic last year, toward the end of last year, and that was not the case. Of course, I have to say I'm quite happy in terms of the global, although I did not make money on my own, but that means the world was not that chaotic ending on 2017. So what's gonna happen this year right now? Now, the biggest question, first of all, there is no doubt that the market is heated up very well right now. The stock market all-time high. Dow Jones this week just broke 25,000 point again, and the PMI from Eurozone, the PMI from US, Canada, Australia, New Zealand, even Britain, even UK, the factory productions, all this data is looking very well, and most central bank is still going into a sort of a hiking cycle, or at least they are trimming back on the easing. That's the case for ECB, and that's also the case for Australia and New Zealand. In terms of Canada, US, and UK, their central bankers had already hiked last year, 2017. So there's no doubt that the market is heading up. However, the question is, first of all, how strong this momentum is going to continue. Second question is, are we going to have a correction? And third thing is that whether the correction will actually become a reversal. Now, you're always going to have an equal amount of seller and buyer trying to predict the market. So for me, I'm not really interested in participating in that game, first of all, because I'm not an expert, to be honest, for the economy. So I don't really know where is the economy is heading. Like, I don't really like to predict the future. So I can just say what's happening in front of me and what's about to happen. Now, why would people think the market might crash in 2018? Well, they're taking into the historical pattern that, in the history when the market shoots up like what we had in 2017, and now most likely basically saying that the market is being irrational. So at the end of the day, you will have more, a price will goes higher than buyers. So at the end of the day, when there are no more buyers, the market might crash. On the contrary, the people who think 2018 will continue to be a bullish year, they're looking at the fundamental side. They're saying that the tax reform is going to boost the corporation profit. Most central banks are on the hiking cycle. Most inflation are picked up, and that's why the market is looking well. So there's a lot of equal. So again, I'm not really interested to predict it, but as for now, what's happening right now, of course, the market is looking very well. Stock market, equity market is going very high. This week we have the Chinese data, which also came out very positive, and the most notable one, the sector, was the commodity. If you take a look at, this is a daily chart. If you take a look at the copper price, it's really, since 2017, we are in a very steady uptrend for copper. In terms of the iron ore, we got a big recovery from the previous downtrend, but ever since 2016, it does look like we are still in the uptrend. Now, oil is also in a very good uptrend. As you can see, WTI right now is at $61.49 right here. And although last year we had a lot of roadblocks, but this year it continued to go higher. Now, of course, I do want to remind you that if you take a look at the oil market as a whole, it is still recovering from the previous oil market shock, which goes to the all-time low at 2016, beginning of 2016. So we are still on a recovery cycle for the oil market. However, the economic side looks pretty well. Why do I say it? Because last year, November, OPEC passed the extension deal. It means that they are still curbing the oil output in 2018 until September. On the other hand, we have a stronger oil demand in this year. And that, of course, correlated to the global market demand. As I mentioned, when the global market is basically recovering very well, not only in US, right, in China, in Australia, in Europe, you have a higher demand for the oil, and you have a lower supply. Artificially, of course, you have a lower supply because the major producers in OPEC are not producing in a full capacity. That, of course, low supply, high demand will cause the oil price to increase. Now, the risk is that we all know this is artificial gain. Basically, the supply is low because of the artificial control. It's not because all of a sudden we can no longer produce oil. Now, on the contrary, the supply is low by the OPEC curve, but the crude oil producer in US actually took the advantage to pump up the oil output. So that's the first risk, that whether OPEC can really help the oil market to recover to the upside. Consider that you have a crude oil producers to balance out a supply and demand. Second thing is that we have the Iran protest right now, which caused the oil supply cut. Right, so right now Iran is in a chaotic political situation. The second country is Venezuela, which is also in a political turmoil. So these two countries are very big oil output, and right now the market basically just worry and panic that maybe the output supply will be further disrupt. So all these contribute to the lower supply, which again boosts the oil price. So that's the basic picture right now. So at the beginning of this year, just first week right now, we can already see a very strong rally in the commodity price. Now, of course, the commodity is denominated by the US dollar. So that means the compound effect is that dollar index continue to drop. Now, dollar index had already dropped since 2017. So 2017 was a bearish market for US dollar. Now, the interesting thing is that it was such a reversal. Basically, remember when Donald Trump won the election in 2016, and people will start expecting, if I drag it here, people will expecting 2017 to be a bullish year for US dollar. And that was not the case. 2017 was actually a bearish year for US dollar. Now, the reason why it's really, I gotta tell you, it's hard to say why. Like, there's no one reason, because the reason people expect US dollar to go up, there was a very logic, fundamental reason. You have to look at US dollar right now. The central banks had hiked twice already, and they are going to hike 2 to 3 more times in this year as expectation. Second thing is that the economy had picked up, inflation had picked up. So why is US dollar not going higher? That is a big puzzle for a lot of traders, including myself, to be honest with you. Now, of course, you have a different explanation. People are saying that inflation is still not high enough. But regardless of that, if you take a look at other currencies such as Euro, such as CAD, it is just no reason really for US dollar to continue going lower, fundamentally speaking, because all other currency, without the strong economy as US, their currency already recovered very well to the upside. So, it's just, for me, I personally couldn't find a fundamental reason for a bearish US dollar. Fundamentally, from my perspective, I do think dollars should go up in 2018. Now, that's just the economic point of view. You have to always consider the actual buyer, right? Are people interested to buy US dollar at the moment? But the reason I think it's a bullish year, first of all, I think we have been oversold for 2017. There really weren't really real catalysts for dollar to be so negative. If you look at the central banker's point of view, you look at the economic point of view, even if you look at the bond yield. Okay, let's take a look at the bond yield price. US bond. Let's take a look at 10-year bond yield. So if we let's go to daily. Okay, so this is a bond yield price. Okay, so 2017, you can see the bond yield actually continued to go up. And of course, the yield is going down right now for the 10 years yield. So that this corresponded with the US dollar quite well. Let's take a look at 2-year yield then, because 2-year is really where the Federal Reserve has control, basically. So the 2-year yield continued to go up. It means that the market is fully expected a higher interest rate for the US dollar, right? So the 2-year yield react basically as what Fed is expected to react. But dollar is not following the 2-year yield. It's not even following the 10-year yield at the beginning. So it doesn't mean dollar will always follow the yield, but it just means that I don't know personally. I don't know why dollar is being bearish, this bearish right now. Consider the economy is being very bullish. Now with the tax reform, that's going to cause more economic activity for the US. So that's something we will see how it unfolds. Again, just right now, just the beginning of the year. So we'll see how does it unfold in 2018. One thing to remind you, that one thing that's very, very important to watch out again is the inflation data, because what's gonna shock the market for 2018 is that a strong US dollar, because a strong US dollar means dollar become more expensive. That's going to basically pressure the stock market, the equity market. Now, if we have any sort of retracement in the equity market, we might have a little bit panic sale. Consider how strong the equity market right now is. So that's just something to keep in mind, that if in 2018 inflation all of a sudden shoots up, and it might happen, we really don't know how the market is going to react. Now today, of course, the non-farm payroll came out as lower than expected, only at 148,000. But the average hourly earning was not bad, 0.3%. Unemployment rate is really at an all-time low. This is really the lowest low since 2001. So, from the economic point of view, of course, when the employment is at such a unemployment rate at such a low place, there is really one way for the average wage earning to go, which is to the upside. Especially right now, the tax reform is really going to benefit the corporation, and they will become more competitive, and the hiring will continue. So it's just a matter of time for the wages to go up. Once the wages go up, of course, everything become more expensive because people have more money to buy, and that boosts the producer, put the price into the product. So inflation seems like a logic path. However, that was also the scenario for 2017, and that was also what puzzled Fed members. So I certainly don't know whether it's gonna pan out like that. But just looking at not only the US, looking at Canada, also at a very positive employment data, very, very low unemployment rate. So it seems like a global trend that the inflation is really much better compared to 2016 or 2015 or maybe the year before. So that really just means that we might see a further tightening. If that's the case, I do expect US dollar to go up. Right now, especially the major support at 91. So again, a lot of people are interested to sell dollar. I certainly think, yes, we are in a downtrend for US dollar, but how strong that downtrend is going to be, I don't know, because I couldn't find a real fundamental reason for dollar to lose its strength, especially when other currency are going up. When their countries are not as strong as US. Okay, so commodity price again, just I mentioned, keep going up, and I have two trades that's still ongoing from last year. So first is my dollar yen long, right? Oh wow, it's very let me close it. Okay, so my dollar yen long was from last year, where I got in at 11120. So really pretty much the low of the low since the last year, November. Now right now, I would say it's still in the range bound, right? For Japanese yen, something that's very interesting is the Winter Olympic is happening in South Korea, and because of that, North Korea and South Korea are going to reconcile. At least they are going to stop fighting each other for now during the Olympic period, and that seems like to be the path for now. Now, US also promised to stop the drill with South Korea. That means that the world, especially in the peninsula of North Korea and South Korea, we will have a temporary peaceful moment. That means the safe haven inflow will not happen during this period, right? If that's the case, because remember last year, that was the main drive for safe haven. It was from North Korean and also from US, the geopolitical events and from the Brexit. But if we take out the North Korean element right now, that means that the Japanese yen will most likely not going to go up for the next few months, during the Winter Olympics. And on top of that, with the current risk on sentiment, that makes Japanese yen become a very attractive currency to be sold. So that's something I'm very interested in. Not only Japanese yen, Swiss franc as well. That's something I think has a very high probability to go down for yen and Swiss franc, just because right now everything seems to be lined up quite well. Now, of course, dollar yen is not the best pair to choose since US dollar is very weak right now. But I got in again last year. I'm already moved to break even, so I'm just letting this trade run right now. The other trade I got in last year, which I'm still in, is dollar CAD. Now I got in here at 1.2647. So around here. Now of course today the positive job data from Canada really helped this trade. Now, CAD is very, very strong right now. Not only the good data today, but the oil market rally also helped CAD. And because of the data today, the OIS market has priced in 60% probability for a January rate hike. I don't think Bank of Canada is going to hike interest rate in January for the very simple reason that the new mortgage rate, personally, because I live in Canada, so I'm more like sensitive to this kind of thing. Now the mortgage rate, the new mortgage rule basically had been introduced. It started to activate it in January. So the government already watch out for how the housing market is going to react to the interest rate from last year. Now this year, since they are also implement this new mortgage rule, I really don't think they are going to hike interest rate at this moment, because they're really risking a housing sector recession if they become too reckless in this kind of approach. On the contrary, I do think March probability rate hike is very high in March, but in January, I just think it's quite risky for Bank of Canada to suddenly just hike interest rate in January. Consider they are still looking out for the housing market. They want to see how is the housing market going to sustain the interest rate hike. So I think they might hold on to it, but I think they will become more hawkish in the January meetings. So we'll see what happens. But that's the trade. I'm also already at break even because I had today a big drop, which held my dollar CAD short. I actually also took one trade, which I actually shouldn't take any trade in the first week, but I saw an opportunity, so I took an Aussie Swiss trade. Now originally I want to buy Aussie, right? Not necessarily Aussie Swiss, but I want to buy Aussie because of this strong rally in the copper market, strong rally in the oil market, and also if you look at the equity market, looking at all the global data, especially the data from China this week, I feel that it's a very strong economy right now globally, and because the strong demand from China for the copper, iron ore, and a strong rally in the oil market, the strong rally in the equity market, I think that's all going to benefit Australian dollar. So I got in this trade because the current sentiment is very bullish for Aussie. Now, of course, Thursday we had a negative data for trade balance coming out from Aussie, but that hadn't done too much of negative things for Australia. So Aussie yen or Aussie Swiss was my choice. Now I didn't really have, I missed this one, so we didn't really have a retracement basically. So ever since we start rally on January 3rd, we are basically we just took off, right? There was no chance for me to get in. For Aussie Swiss, on the other hand, we did have a little bit drop here. So for me, this is an 8-hour chart. For me, I'm still looking for this trade to go all the way up to taste 78 for sure, and we'll see if it's gonna keep going higher. In terms of hourly chart, I got in, I don't know if you can see it, let me take the, so I got in basically for hourly chart, basically just when the trade break out this regression channel and looking to the upside. So I basically just got in with this box. When it breaks out this box, I got in at here, and now just trying to hold it, see if we can just continue to go higher with this uptrend channel, right? So because this was the low of the low basically. So this was you can say it's a sentimental play, because I don't really have any catalyst to push Aussie, but because the sentiment right now it's very, very bullish, so I took basically Aussie Swiss as a sentiment play. So that's really the only thing I'm looking at right now. Now, Euro dollar is obviously also very strong right now. Let's take a look at Euro dollar. Let's take a look at the major currency here. So Euro dollar, you can see ending in November last year we're still at here at 1.15, and basically we rally broke the previous high already. So we broke the previous high, which is 119 here. You can see this trade. If you are in this trade, it break this regression channel and really just took off basically. Now, right now the high is at here. Well, sorry, so we haven't broken it. All right. So if we draw a resistance line here, you can tell that we are at a very strong resistance. 1.2021 handle will be a very strong resistance. This rally, again, I'm not too confident about it because I really think dollar might hitting a support. If dollar hit a strong support, and next week, and don't forget, next week we're going to see the CPI coming out from US. So that means if we have a very strong CPI next week, right on Friday here, and we also going to see the ECB minute, right? I think on Thursday or something. Let's see, where is it? Right here, monetary minute. Okay, we're going to see on Thursday. So we might actually have a reversal next week if we have a dovish ECB and a very good inflation data. Now, even if we have a hawkish ECB, if we also have a strong element to push US dollar, really you have to ask yourself, why would euro dollar keep going up? Now, it might, again, like I said, people might just continue to sell US dollar, although I don't know the fundamental reason for that. But I certainly don't want to go against the crowd. I don't want to catch the falling knife. So although I'm interested to buy US dollar in a fundamental perspective, but I'm not going to do that at the moment. And if you want to buy euro out of the current dollar weakness, it might be a good choice, but definitely not here because you are facing a strong resistance. On the contrary, if you want to buy euro, maybe you go buy euro yen or euro Swiss. That will be a much safer options. Personally, I'm not looking to do that just because I'm rather pick a commodity related currencies to go against the safe haven currencies. For euro, I'm actually interested to see if the resistance will work next week or if the dollar can regain strength. So basically, I'm actually looking to sell euro if we have a reason to do that next week. I'm probably not gonna choose euro dollar to heading head. I'm actually more interested to sell euro CAD. For me, CAD is a much stronger, much certain currency. So I'm actually interested to sell euro CAD. If we have a little bit retracement next week, then I'll be interested to actually sell euro CAD. But I don't really have any reason for euro bearish right now. So I do need to see more of a bearish reason for euro to go down for next week. Okay. So next week, obviously, most traders will really fully back in the market. You can say next week will be the real week, the real beginning for 2018. So we will see what happens. We do have Bank of Canada Business Outlook, few FOMC members speaks. Tuesday, we have the Chinese inflation data, which is going to be correlated not only to the Australian, but to the global market. And Wednesday, you have a manufacturing data from UK, crude oil and retail sale from Aussie. Thursday, another inflation data from US, and Friday, very important, core CPI and CPI from US. So next week will be quite important just because of the inflation data. But again, at the beginning of the week, not really too aggressive. I think the market is not, I don't really have a clear trend right now to trade. So aside from the Aussie Swiss that I'm already in, CAD will be something I'm interested to buy again just because I already said dollar CAD trade to break even, so now I can take one more CAD trade. So I'm probably looking to buy CAD, maybe CAD yen, maybe a CAD Swiss. That will be the best choice. For US dollar, I know a lot of people are selling it. I'm not really interested to do that just because we might see a very strong support at 91 handle for the US dollar index. If that's the case, we might actually see a rebound. If we see the rebound, then you will expect to see euro dollar actually drop. Same as cable. Now, British pound, honestly, don't really want to touch it at the moment, just because I don't. First of all, I don't really have any catalyst. Second is that I don't know what's going to happen to the Brexit. So British pound had been very difficult to trade for me personally in 2017. So for 2018, I really wanted something more clear before I jump in to buy or sell British pound. Okay, so that's pretty much what I have for this quiet first week of 2018. And again, looking forward to have a great trading year. If you have any questions, feel free to let me know. I'll do my best to help you out. Other than that, it's weekend. Take some time off and enjoy the weekend. I will see you next Monday. Thanks for watching. Bye bye.